So the VIX shot up, the S&P futures gapped down. I'm going to spend a little time talking about this gap. Sorry if you've heard this 100 times over. It's just important to understand because the last time it gapped down, I said that's weird. Let's take it. Well, let's keep an eye on it, and look what happened. We're in melt mode, and we gap down again. You're probably thinking the S&P gaps all the time. It's because your intelligence is a little bit gapped. Short bus everywhere. When you walk, you got to wear a helmet. Someone's probably got to leave. I'll stop. Um, if you think the S&P gaps all the time, it's just because, again, you just don't fully understand the markets. SPY is an ETF, and the futures are what drive that order flow into the ETF. All this is doing is playing catch up and copy. That's all it's doing. It's like a little mini-me just running around. Um, so this a gap on SPY, completely irrelevant. A gap on the futures, why was there not a single buyer? Not only is there a gap on the futures, but this is the part that is alarming to me. And we're going to go full screen mode for this. So even at 720, I don't care if this is in 360. You should be able to see it pretty clear. Scoot your phone up to your face if you can't see it. What does this yellow zone mean? When we're coming in from the top, what do we think? When we see this yellow zone, we think buyers. Okay? Look what happened. We dropped into the yellow zone, even tried to get a little bit past it. Buyer showed up, ultimately held that zone. Same thing again. Sold off, hits that zone, finds those buyers. Winnie the Pooh's not having it. Winnie the Pooh, all he did was, does he pull up his sleeve? Does he roll up his sleeves? Actually, he ripped his little baby sleeves off. Now we got a tank top Winnie the Pooh, sharpened his fangs, and he's going to town. What they did was gapped it right below that zone. Now, when you see this happening like in a stock, to paint that picture, it's kind of like JP Morgan's really trying to drive this thing down. So they're selling shares, and nothing will bring on red candles like nothing will bring on fear like a red candle. You think that fear-mongering crap news they put out, that's nothing. It's silly people fall for the news, right? They read headlines and they make stock plays off of that, and they are what fuels my account. We're just taking money from their account to mine. The only way it would be any easier is if they just PayPal'd me the money and we just forget everything else in between. If you're doing that, I got a PayPal. Send me crypto if you want. I'm about that life. I would like it to be easier. Assuming you're watching me, you probably don't want to do that, so stick with everything else. But anyway, JP Morgan, they're trying to sell this thing off. Goldman Sachs just has an algo that is buying it right here. Now, algos, people think they're a big, bad, scary boogeyman. They're not. They're just a literal computer program. It's like math, just a little bit more complex. Had you stayed in school just a little bit longer, you'd understand there's more than just 2 plus 2. And yes, it does not equal potato. It equals something very different. So what they do is they gap it right below. Hey, these parameters are telling you to buy up the S&P if it hits this. If the S&P, if ES hits this, start buying, start filling, right? They got to create that they got to create that panic so that people sell so that they can buy. That's how they take larger positions. So to paint that picture, hey, drop that thing right below because I'm tired of jacking with them. So Goldman Sachs keeps buying while JP Morgan's trying to sell this thing. Gap it right below, start triggering everybody's stops. Get all that sell side activity on your side, and then it sends it even further. So when you see it hit that zone and then gap or completely gap around it, there's even zones created around gaps. People think it's a gap fill that they're worried about. In reality, there's someone else trying to jack with someone else. Remember, this is an elephant stampede, and you are merely one of those little annoying flies that they're trying to swat at with their tail. All you're trying to do is get lucky, avoid that tail, and hang with the stampede and not die in the process. You don't want to land on the ground and get ran over. That's your only goal in the stock market. So everything about the VIX being up and the ES gapping down should be all the signs you need that we're probably going to continue south. But what really sucks is how hard it's going to be. Now, with the power of hindsight, it's going to be easy to come on YouTube and say, see, I told you to go short. Obviously. It's going to be a lot harder to do that in real time because, one, you're going to think this is the deal. I'm going to catch that knife. Man, is it going to hurt. Plus, we got to draw more zones now. But two, the trend is down. And if you make it a habit of buying puts when you're already this low, I'm going to have another video coming out about why I made fun of that decision as well. This is a very tough one. If you were already short, if you were watching my last stream where we talked about this being a rip your face off rally, watch what happens next. Let's judge it when the bears show up. You're already short. You kick your feet up on the desk. You get one of those face masks, that make you sleep, and you hang tight. All you got to do is trail. This is some of the easiest money you will ever make in your life. If you are not in a short position, you're trying to get into a short position, it's like jumping onto a literal moving train. So you can do that by, so I trail 2 candles back. So I take a smaller position. I don't care about zones at the time. I don't care about anything else. The overall candle trend is down. So my stop is going to be 2 candles back. I take a position according to that and I hope a rip your face off rally doesn't happen. There is a very big difference between a rip your face off rally and a relief rally. So watch last week's video because I literally talk about this as it's happening. Anyway, so I take that, and when it builds up, I'll add on. Get a little bit of a cushion, add on. Especially if it bounces up, hits one of these zones, kind of creates that bear flag. There's another opportunity to kind of lean into it. That's like running next to the train before you jump on. If you're trying to jump on a moving train, you don't just go straight for it, right? You run with it, you kind of get a hand in there, you try, you test the waters. You're probably a little scared, so you let go. No one fully commits to the first jump. Then you just really get some speed, and then maybe you go for it. Picture that as you're trying to jump onto this moving train down. Just know that you're probably going to run into something. Like it's going to hurt. You need to be fully prepared for that green candle to show up and tag you out. Again, not an ideal scenario, right? Sometimes you just miss the trade. It's something YouTubers don't talk about a lot is you just missed it. Move on, all right? Sucks to suck. So what can you do when you miss a trade? Wait for the right time to sell. If we're halfway there, you're going to wait a bit. What if it takes a month to get to the bottom? What are you, stage 4.5 right now, and you have a month and a half left to live? What's the rush? You're not going anywhere, okay? So hang tight. If you miss a day, a week, a month in the market, so be it. There's plenty of things you can do to make money while this is happening. But if you're just that anxious, trust me, you're not going anywhere. The market's going to still be here. I promise. If the market goes away, we got other problems. It'll be at least your worries. We selling at the money covered calls tomorrow. This is where, and I'm going to answer this because it goes kind of right in this because we're going to jump into tech. I haven't even seen tech yet. I can only imagine. And to be clear, guys, this is Sunday night. When the volatility is this high, a lot can change by tomorrow morning. A lot of times you can watch these streams. I have a whole group of people that watch these streams in the morning, still make plenty of plays because the market's closed. That's outside of futures. That's why I do this at night. So I can make all my plans with a clean, clear head. Nothing's moved. No one's shoving headlines in my face. But a lot can happen. This could be the fake out. Maybe there's only 3 people trading right now, and the VIX is lying. Possible. Like Mike says, the odds are greater than 0, which means it's on the table somewhere. It's just a very big table. If you're that confident, you sell at the money calls. At the money has the most theta. That is where it is juiced up the most because, again, your delta's 50, right? You're controlling 50 shares. It's also a 50-50 shot of it expiring in the money. If it's going to continue to sell off, that's a good chunk. The problem with this, and NVIDIA is for the best example we've ever had last week because we talked about this. How many people made an emotional decision last week on NVIDIA? The chart looks almost identical to this. They're like, oh, crap. It's right here. So they sell some calls and all of a sudden those calls were in the money. And then they start freaking out. I got to roll up. I got to roll out. I got to do this. I got to do that. Then the next day it was right back down out of the money. I sold 108 puts. Everyone thought I was going to get assigned. And then it shot back up. I closed them for pennies. And then it sold back off, and I did sell some more. I do own more at 108. But anyway, I got to double dip on that. I was perfectly fine with buying it at 108. Now, you have to be perfectly fine with selling your at-the-money calls. Because if you sell an at-the-money call and this ends up being a fake-out or relief rally, man, that couple bucks is going to suck. Because when you're an option seller, you don't collect much. It's a base hit. That's all it is. Base hits add up way more. It's why casinos love slot machines. They'll take them all day long. Yeah, some person comes up and hits a grand slam, big deal. They're not even worried about it. And just jumping back to this is exactly why you probably don't want to do that. With the VIX being this high, again, that next candle is going to be green or red. It doesn't have to be red. We're just in a downtrend, so we might see some panic to the downside, but that trend does change. Is it rare to sell off more than 20%? Single stocks? No. As far as the S&P goes, 20% in a day, I'd say that's pretty rare. 20% in general, 20% is when they finally call it a crash. Again, a pullback 1 to 9%, correction 10 to 19%, crash 20% or more. So I get to buy back those covered calls on Monday for $1. Oh yeah, so as far as things go, yeah, you're gonna get there just fine. Let's talk about the NASDAQ. Prime example. Here's that pesky little zone. Like, dang it. We know Don draws these yellow things, but we're trying to sell this thing off. Someone shoot Don a message. I probably just didn't get the text. That's all. So they gapped it. You think it's a coincidence? They gapped it right to the bottom of that zone, and now we're selling off. NASDAQ's going to be cheap. The problem with selling at the money calls is we're going to sell off tomorrow. We're going to be in this zone by tomorrow morning. What are we expecting? Buyers. Market morning, all you're going to see is red, 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 red. That bell's going to ring. You're thinking, at the money call, while I can, I got to get it. It's going to spring right up. You're like, crap. So no matter what, like I said, this market's going to humble people that don't have a plan. And if your plan is led with greed, and not to say selling your at the money calls is a bad idea, because if you're in melt mode, yeah, it's a great way to get that income, right? To even buy more of the dip. But if it's at all led with greed, or you position yourself wrong, that market is going to sniff these things out like a canine. I was going to say a drug dealing canine. I don't know why that sounded good, but the police dogs, right? They're going to find out who you are. It's going to look personal. It's going to look like they bought specifically your order flow. They called Robinhood, whoever you're trading on, Webull, and said, listen, I don't want all the order flow. I want this guy's order flow. Here's his social. Here's his last Facebook post. Here's his picture. Get me that guy, because they're going to make sure you bottom ticket almost to the T. Wait until the market calms down to sell calls after 30, 60 minutes. Yeah, the more data. So here's again, that scale is never going to go one way without the other. When the market settles down, you might collect a little bit less, but you made a little bit more, and I hate to say this, informed decision, because you have just some more data. All right. First of all, Monday morning, this is what I do. Let everyone get their coffee and get to their desk. Let the pawns go first. That's why in chess you have a full layer of those things. Send them. That's what the pawns are for. Let the peons go and see who gets crushed. Let's see which way we're headed. Oh, they're taking it that way? Hey, me too. I've been on that train the whole time. We jump in like one of the regulars. As far as the NASDAQ goes, man, we are going to be rocking. What strike do I plan on selling NVIDIA tomorrow? It really depends. Let me break down the Russell real quick, because then we're going to talk about Tesla and NVIDIA. You can't tell a crackhead that a crack rock isn't a diamond. That's a good thing we're not streaming on TikTok, because I'm pretty sure that for sure would get me banned. All right, Qs. I will update the expected moves right now. They're not it. Little Russ. Remember that one time we were talking about a rotation? Yeah. Rotating your account into somebody else's because you have no idea what you're talking about. Thumbs up of approval. Again, people like me need people like you. Thanks for showing up. Another gap down in Meltdown. Everyone says this. It should be pretty obvious. First of all, small cap stocks. They're the small ones, right? Some people love them because if they do become at one point, Amazon, NVIDIA, they were all the little guy. They were the underdog. And if you catch one of those at the right time, you bought Amazon at $7, and it went up to 3,500. That's a banging play. There's a reason why you know about that one, because the other Russell 2000 didn't. And if you're in a recession, man, you're going to have to really find that diamond in the rough. And it makes more sense finding that diamond and buying that one than it does buying 2,000 losers. That being said, I'm sure I offended somebody along the lines of this one. The Russell in a recession, these guys don't have any money. I would be trading the Russell based more on financials than I would anything else. Certainly wouldn't be the small cap stocks in there. Hey, little guy, you're going to be the one that fixes the world. Nope. That's not hate speech. People like crack. I did look at the $90 strike today at a lunch. I was having lunch with somebody, and maybe it'd be fun to even bring him on. but I met him because he bought an orange C8 same time I did. We were one of the first two to have them in the Kansas City area. So that's how we met, and he's learning about stocks now. And we were talking about just selling puts, and we talked about it in video. We did look at the 90 strike, and I said if the futures open up red tomorrow, that 90 strike, if you keep that strike the same, is going to be a lot more in the morning because you're going to be that much closer. We can even see. Okay, so here's a good idea, good little workaround. We're melting down. We're getting the beat down. Now, James, who previously said should we sell at the money calls, is now saying the 30 deltas instead of the normal 18. See, now we're talking. So using the deltas is a phenomenal way to gauge your position, your confidence, your how bearish, how bullish are you. If you're bullish, you're not selling the 20 deltas, you're selling the 10. If you're bearish, like, hey, this thing's coming down, all signs pointing down. We got Bob Barker just shouting out the market, opening the bell that day, opening and ringing the bell that day, saying, come on down. And you're bearish, yeah, you probably start selling the 30, 35 deltas. People run the wheel strategy all the time and sell 30 deltas. They're in management mode every other week. But yeah, if you're bearish, adjust those deltas. It's like fine tuning anything. All I can think about is a car. You're just adjusting your fuel to air ratio. And all right, we're headed this way. We're running a little lean. All right, we're gonna crank it a little bit.